Good day to one and all. This is Dr. Sivaraman of inoindices.com. Hope I am audible. Let me display the PowerPoint presentation. Tracking the forex market together, part 2, between 14 and 14:45 GMT on November 25th. And I was giving the part 1 today between 9 and 9:45 GMT during that of the European session. Now it is the close of the European session, and 14 to 14:30 GMT is the gap time, and from 14:30 onwards the US session starts. So before that, I wanted to show you how exactly they make false moves during that of the gap times. So we will just review the market using the live market code page. I've given the link for the same, and we'll just review the highs and the lows which are set during that of the Asian session and also subsequently during that of the European session. And what is the current scenario? We will just review it. I now focus the camera over that of the live market code page. Currently, Euro is trading around 1.323132. and 1.3212 is the low. The high is not disturbed. Similarly, in the case of GBP, 1.5423 is the low, currently trading around 5474, and USD-Yen has gone up, and also USD CHF has gone up, and USD CAD and Australian dollar are making subdued moves. So we will just compare these levels to that of the Asian session initial lows and the high. Let me just focus the camera over that of the another PowerPoint presentation where I have the Asian session lows which are being marked around 3:30 GMT. So Euro was around 1.3304 at that time. Currently you find that it is trading around that of 1.323031, and they formed during that of the European session 1.3354 as the new low, but subsequently towards close of European session we come across 1.3212 has become the low. In the case of GBP, 1.5452 was the initial low during Japanese session, and subsequently during European session you can see in the live market code page 5423, and afterwards they are not breached it. Now it is the start of the gap time. So let us just review how exactly in these two currencies they are trying to make the moves. And in the case of Euro, 116 pips negative net change is seen. But in the case of GBP, only 18 pips negative net change is seen. And that shows that they are focusing on Euro GBP cross. By dropping Euro and holding GBP, they are able to drop Euro GBP cross drastically, and about 62 pips negative net change is seen in the case of Euro GBP, currently trading around 0.8552 and 0.8553 levels. So you can understand that they are really focusing on the majors. Wherever they come across more money, they try to focus on either the majors or the crosses. But during the gap time, they primarily focus in the case of Euro and GBP in order to create the market sentiment and try to do some stop in some of the currencies. And in the case of Yen, the initial high was 77.54. They breached and formed 77.74 as a high, and currently holding around 77.66, 77.67. So it has breached the high and it is staying above that. So let us see how exactly it is expected to make the move. Now you find the spread is increased more than 50 pips in the case of USD. And in the case of CHF, again they breached the initial high and almost they have gone to 0.93 and currently trading around 0.9287, 0.9288. So that is what you come across current level, and they have gained about 70 pips from that of the initial high. In the case of Euro, they had dropped almost about 70 to 80 pips from that of the initial low. But in the case of GBP, they hardly dropped about 25 pips. So then in the case of Australian dollar and Canadian dollar, we see that 96.84 was the low. They breached and formed 96.67, and that has not been breached yet. And they are holding around the middle level 96, 98, 96. So they are showing all the same levels bid and the ask. Then in the case of Canadian dollar, 1.0491 was the initial high. They breached the high and formed a new high, 1.0523. A nominal upward move is seen in the case of Canadian dollar as the USD weakening move. But in that, different currencies weaken in a different proportions. And if you see the initial lows and the highs and compare to that of the European session low and the high and the current low and the high, then we understand how exactly they are handling specific currencies, right, during different time frames of the day. Now, let me go back to that of the PowerPoint presentation of the current subject. Okay, so we have just analyzed what happened to that of the initial lows and the highs in each pair, and also what happened to that of the positions what we had decided during that of the Japanese session, European session. So let me go back to that of the slide. So Euro formed the low during my first part of the webinar, 1.3254. I was explaining that the quick moves are false moves. So it came down and formed 1.3254 as the low and stopped cutting the low. Then I took a buy around 32.65 and then it quickly went up to 32.78. Then I removed the hedging order and kept stop at entry, and subsequently it came down and stopped me out, no profit, no loss. And so if you would not have done that, I would have been hedged at 32.35. Even if I am hedged, doesn't matter. Then what I can do is, then I can wait for 30 minutes. And if the hedging is making profit, I can keep stop at entry. And then once they go up, I can just close the hedging and keep another hedging order 10 to 15 pips below and trail it up to the same level. So in case if I am not smart enough and closed it, I can still handle it using the hedging. And when they gain more levels later on, I can just book profit in that of the buy position also. Then I kept a buy limit order at 54.43 in GBP, just slightly above that of the low there, set 54.23, just 20 pips above, and that was not filled. It was trading. GBP was trading around 57.78 and things like that. So I just left it. I said that I will not jump and buy it. Then towards close of the European session around 13:30 GMT, they made a quick drop in the case of GBP and Euro, and they filled my 54.43, and then quickly went up to 54.87. So before that session closed, I want to close that particular position. So 54.87, I simply closed it and made about 44 pips. So these are all the only trades I just envisaged at that time, because I was spending more time in explaining how exactly the hedging can be used effectively when hedging facility is available in the trading platform. In the US trading platform, the hedging facility is not available. So let me explain the trading decisions for this particular session. So it is a gap time. 14 to 14:30 is the gap time. So for that, let me explain to you the session timings. So these are all the session timings followed by that of the players for the three different sessions. So 0030 to 7:30 is the Japanese session, 7:30 to 8 is the gap time, then 8 to 15 is the European session. That is why before the close of the session, I wanted to close the positions, and gap time is between 14 and 14:30. We are currently in this particular session, and during gap time, they are expected to make the false move. If they gain the levels, then they are expected to drop during first 30 minutes of the session. If they drop during the gap time, then they are expected to gain the levels during the session. And so that is how we understand. So first 10 minutes, they just made a nominal gain in the case of Euro and GBP, but not a very significant tries to take any short position because the move is very sluggish. So we will watch how exactly they are handling it and try to take a position in case if they go up quickly, we'll take a sell. If they come down very quickly, we'll take a buy. That is how we'll take a decision because first 30 minutes of the US session from 14:30 to 14:15 GMT, they are expected to make opposite of whatever the move they have done it during the gap time. So that is a concept, we can just test it. Before that, let me explain to you the basic trading strategies, what I explained during the European session for the benefit of those who have joined for the part 2 of this particular webinar. Then we always track the market using the GMT time because it is a 24 hours market. Instead of using our local time to understand the market, instead of dragging the world to your local time, we try to go to that of the world time and participate in that and try to understand how exactly the global time of GMT is being effectively used by the other players. So we also try to use it to understand the various sessions, and the sessions are namely the gap time between the sessions, 30 minutes between Japanese and the European, and between European and US of 30 minutes, and between US to that of the Japanese session, you find that nearly about 4.5 hours because of the geographical positions. Then each session has got first 1.5 hours as the session start time, the last 1.5 hours as the session close time, and in between is the mid session. So during the start time and the end time or late time, they try to handle the majors. During that of the mid sessions, they handle the crosses. So that we need to understand. If you are trading in majors, try to focus only during the session start and session close time, irrespective of the data release, etc. We'll be able to really find good trading opportunities. And if you try to focus on the crosses, you can just focus or concentrate on the mid sessions. There you'll come across good moves happening in the market. Otherwise, during that of the start and the late sessions, you'll find the crosses are in subdued moves. But during mid session, they will start making good moves because they try to make contrarian moves among the currencies like Euro gain and GBP drop or GBP hold and Euro drop. That sort of moves, they will try to do it during that of the mid session, and that will give you a good trading opportunity in Euro GBP or Euro CHF as the European cross or GBP CHF, and also the yen crosses, and that could normally happen during that of the gap, during that of the mid session of Japanese session, mid Japanese session. So during that time, they actively handle the Japanese yen crosses, and also during that of the US session, they try to handle the Japanese crosses. European session, actively they handle the European crosses. So if you identify what are the currencies they do during different time frame, then it is easy for you to focus on those currencies and earn money during the quick volatile moves. And we track the market using the live market quote page, which is offered by Saxo Bank, and it is from the interbank treasury. So you'll be able to really get the actual quotes coming from there. So that is what I have given the link to you. Then if you watch the live market quote page, you come across, first of all, the bid and the ask. Then subsequently you find the low and that of the high, and also the net change. Net is the net change from that of the previous day close. So currently Euro has dropped about 105 pips from that of yesterday US session close. That's what it indicates. GBP has dropped about 14 pips from that of yesterday's close. And USD yen, it has gained about 52 pips currently from that of yesterday's close. So this way the net change indicate what is the type of moves they have done it. Only in the case of Euro, they made about 100 pips and more drop. But GBP about 13 pips and yen only 51 pips. And in the case of CHF, 91 pips positive net change. But in the case of Canadian dollar, only 21 pips positive net change. And in the case of Australian dollar, 34 pips negative net change. So in the commodity pairs, they are not made much of a move there, and they are simply holding it when they are making Euro in a big way the moves in order to handle the Euro crosses. That is a basic objective of today's move. euro crosses, they are trying to handle it. It is not the weakness of euro, and they simply use some sentiments and or created some sentiments, and they are trying to move only that euro. Yesterday, you know that they made quick drops in the case of GBP in order to make market sentiment. Normally, GBP is a currency which is used to create the market sentiment. Then you have to identify the currency which has made a spread between high and the low for more than 40 to 50 pips. In such currencies, if you take positions, it will be easy for you to earn some swing trade profits. Then also observe whether the current level is closer to that of the high or closer to that of the low, which is shown in the case of the live market quote page. You can always refer to that of the initial lows and the highs in order to identify the type of moves what they have done it during that particular day. I was explaining during that of the European session that they breached the low and came down in the case of euro and also GBP, and they did not go above that of the initial low for 2 hours. So when they are not go above that of the initial low, let me go back to the slide so that we'll be able to really understand. So in the case of GBP, euro, they are not gone above that of 33.04. That is the initial low. So we understand from after 2 hours of breaching this particular low, they continue to drop. So they are making an intentional move. Whereas in the case of GBP, they dropped below that of 54.52 and came above that of 54.52 in 2 hours time. Just to create the sentiment, they used it. And afterwards, they have gone above that, and now currently it has come to about 54.80, 82 like that. So it has gone above this. So here they made the extended move of just 2 hours. They came below and gone up. Whereas in the case of CHF, they've gone above that of the initial high, and they continue to stay there. So it is an extended move of an intentional nature on the upside, intentional move on the upside. Then in the case of Japanese yen, only towards close of the European session, they made an upward move, and we have to see whether they come below that of 57.54 or stay above. If they stay above, then there is a potential for it to go, but unfortunately, we know yen is a currency which hardly gave about 20-30 pips profit nowadays. So we should not focus on that to do a breakout trade. And in the case of Australian dollar, they just breached the low and came above this initial low, and currently trading around 0.9702. So it has gone above this initial low, similar to that of GBP. Only euro, they made the intentional move. So once they finish the extended move and try to make a false move up to that of the high and breach the high and stay above, then we have to see an extended move on the upside in the case of Australian dollar. And in the case of Canadian dollar, the high was 1.0491, and they breached the high and formed a new high, 1.0523 during the European session. They just went up to 1.0498, but they breached it to as close to 1.0523 and currently trading around 1.0493. If they come below that, then we may not come across any big move there. So with the help of the initial lows and the highs, we will be able to really understand what are the currencies which can give us the trading opportunities. Then you focus on those currencies. Simply, instead of telling that I will be focusing only on euro or GBP all the time. So you have to identify the currency which has got a great potential to give. The first method of identifying the currency is whether the spread is made between or made more than 40 to 50 pips between the low and the high. Then if the currency is trading near that of the low for 30 minutes from the start of the session, 14:30 is the start of your session, up to 15 GMT, if they trade near that low and not breach the low in that 30 minutes, we can try to take a buy. And if they are near that of the high and not breach the high for first 30 minutes, then we can take a sell. So there is no question of becoming bullish and bearish here. We only identify whether we can do a sell and buy trade or a buy and sell trade in that particular session. So So if you focus that way, then you'll be able to participate along with that of the players when they are making up and down moves in the market. Then similarly, when you enter near that of the low, our exit point will be near that of the high. If you enter near that of the high, a sell position, our exit point will be near that of the low. So there is no need of a sophisticated calculations involved, because the players set the initial lows and the highs around 3:30 GMT, use it as a reference level and try to see where the cluster of stops are accumulated, and they try to make the moves on the upside and the downside alternatively. That is how they increase the spread between that of the highs and the lows during the day. Then also the net change indicate whether the market is making any subdued moves or really aggressive moves. Now they are gaining the levels in the case of euro quickly during the gap time. So you can understand what they are trying to do it, and again after gaining it during start of the session they could make a dip, and then they are expected to gain the levels towards close of the US session, but that might be a very slow move, and we have to see how exactly they are expected to, they are going to make the moves. They are making quick rise now in the case of euro, and also in the case of GBP they have come to the psychological level 1.55. See how freely they are able to make the move, because you won't be coming across during the gap time the bank sell orders or the buy orders. So the officially New York banks open around 9:30 GMT, and that will fall around 9:30 AM, and that will fall around 15 GMT. So before that, the players try to make use of 14:30 GMT, and before that the players try to make very good rigging in the market. So if you think there is no player, then you can see how exactly quickly they are making the move after making a very quick downward move towards close of the European session. And in the case of euro, they just made the drop to induce panic to every trader, and that is the way they earn money, because they cannot enter through your computer and come and tell me, come on, get a fried and sell your position in distress condition. They cannot do that. Only by making the moves they can do it. So that is what they are doing it on a day in and day out. But we only talk that euro is bearish, euro is bullish, and things like that alternatively. And they have various stories and various mechanisms to propagate it. Then avoid that impulsive conditions during trading, and all impulsive decisions of buying after the rise, selling after the drop will invariably lead to losses. That's what I wanted to emphasize on it. Once a position is taken, you try to keep hedging order in case the hedging facility is available. Otherwise, keep 30 pip stop. That will be an optimal stop for any position in any currency pair. And in the case of crosses, 50 pip stop is needed, or 50 pips hedging order is needed, because there the spread between the low and the spread between the bid and the ask is very high when compared to that of the majors and the commodity pairs. So there you need to hold or keep 50 pips stop or the hedging order. If you use the hedging order, then it will be very helpful for you to do either way trading. Then once the position makes about 20-25 pips profit, you try to keep stop at entry and remove the hedging order so that you are not taking any risk. And that is the first and foremost strategy you need to follow in trading. Whatever be the analysis you try to use it, either you want to do a sell and buy trade or a buy and sell trade, irrespective of the market condition. Always try to see that you limit the risk by keeping a stop, and so that that particular stop is filled, you can afford to accept the loss. And if you try to keep about 70 pips, 80 pips stop, and in case if the players found out that predominant of the traders have kept about 70 pips stop, then they can make one go downward and hit the stops and come up. Then you'll be losing instead of gaining, even though you would have calculated that 1:3 ratio of the risk reward, but the risk would have been seen first. Then where is the question of reward? So that we need to understand. Let me go back to that next slide. In case if they have breached the high or the low, now if you find that they have breached in the case of euro alone, the European session low of 32.54, and then came down to 32.12 and then went up again. So we understand that it was a quick downward stop, and now gap time, they quickly gained the levels and they are just making a dip. And in case this sort of moves, we can only watch. We may not be able to effectively trade because they are not holding the levels or gaining considerably. In case if we take a trade, a sell, then probably we can get about 10 to 15 pips profit. That sort of scalping, we should always avoid it. Then in case if they are making an intentional move similar to that of euro, what they have done today, during that of the European session, they breached the low and then dropped, and they are expected to continue that drop, and still they are holding around 32.49 level now. And 32.54 was the low set during that of the European session, and the initial low was 1.3303. And so once they make a drop of more than 75 pips, then the reversal may not happen on the same day, and they could make the reversal the subsequent day. But in the case of GBP, they just only made an extended downward move, and they could gain the levels during this particular session in order to handle Euro GBP on the downside. And in tandem with that of the market sentiment created by GBP, you could find Euro is also slowly making the recovery to that of the initial low during the day, 1.3303. That could be the scenario we could see. So this is the market reading. How I had done it? Identifying the type of moves, what they have done it. Nothing more than that. It is not a speculation or anything, or it is not using the algorithm. It's just using how exactly the levels they breach and the levels they hold, and on what basis you can see. Because if somebody has sold around 1.3303, they are given that profit booking opportunity. But a person who has sold it after the drop, then you could go in for a short covering. So that is what happens during the Friday. So normally when the people hold high level long position without any stop, they find that they continue to drop, then they try to stop out at one stage because of the equity fear and try to recover that particular loss by taking the opposite position, a sell position after the drop, and they expect further downward move in the case of euro, but slowly the players could gain the levels by creating the sentiment, opposite sentiment, using GBP as a currency to move up. So if you identify the type of moves, then we will not try to buy after the rise blindly. We can buy after the rise only if they make an extended move. And if they make an extended move, we can buy after the rise above that of the initial high and try to keep a hedging order or a stop below that of the initial high. And similarly on the downside, if they breach the initial low and they have come down, then we can sell below that of the initial low and try to keep stop at entry. And when they go down, we have to trail the stop and book profit, but not to sell after the drop. And they are already done about 90 to 99 to 100 pips drop, so it is not advisable to sell closer to that of the low what they have set it, because hardly we may get about 10 to 15 pips. For the sake of 10 to 15 pips, we should not lose our shot. So in case if they make an extended move, wait for 2 hours. In case if they make an intentional move for 2 sessions and part of the 3rd session, then wait all the way for their move and identify what is the net change they have done. So now already they have done about 100 pips or 98 pips in the case of euro. In case if it drops further down, about 150 pips, then try to take a buy during early part of the European session. Then they are US session, then they are expected to gain the levels to trap the short sellers. So that is how they make the moves in the market, and that we need to understand. They cut the high and the low, then use these, identify whether it is an extended move or an intentional move. If they simply cut the high and come down below that of the initial high in less than 30 minutes, it's a stop. And if they go up to that of the high and come down in less than 30 minutes, it's a false move. Similarly, they go up to that of the low and then come up. In the case of GBP, they made a quick drop, but they are not come up to that low, but quickly gained the levels around 13:30 GMT. They are all false moves. They try to pretend as if GBP is going to drop, inducing the traders to sell, quickly gain the level, and inducing them to do the short covering after holding high. So these are all the trick of the trade they follow. Beyond that, they cannot do anything. Every market, they do the same. Always understand quick moves or false moves in the market. And whenever they quickly make a downward move or an upward move, they are all just to lose the level or gain the level. Lose the level to buy and gain the levels to book profit. But when they lose the levels, we become bearish. When they gain the level, we become bullish. But when we are bullish, they are happily selling to us at the higher level. When you are bearish, they are happily buying it from us at the lowest level. So you can decide who is smart. Then in this session, Euro and GBP are expected to make their swings and firm up during the US session for the weekend. So let us see whether we can think of any trade. Now Euro has formed, come closer to that of the low what they have set, 32.52. 32.54 was the low they have set during the European session. And theoretically, we can take a sell there and keep hedging order 30 pips above and try to book profit. So let me just take a sell position. Why I have taken a sell position? Because I am using only a hedging order to limit the risk. So my hedging order will be at 1.3284. In case if they hedge me, doesn't matter. I'll see whether the hedging is making profit. If it is making profit, then I'll keep stop at entry and wait for about 30 minutes. If the stop is not filled, then I'll simply close my sell position and try to maximize the profit. So in the buy position, if they show another extra 30 pips profit, I am at break even, and if they gain further up, I'll be in net profit. So identifying the moves, I am trying to take the position. So yes, sell near that of the initial low they are set during that of the European session, 32.54, and now they are holding around 32.55. And in the case of GBP, they have gained it and they are simply holding it, so they may not make a big drop there. So after the drop, we can take a buy. So 54.23 is the low what they have set. Probably they could make a reversal move in order to make swings. In the case of Euro GBP, they have made the drop in the case of Euro GBP to that of 85.50. They could gain about 25 pips in the case of Euro GBP and then continue that drop during the US session. So in that process, what they have to do, gain levels in the case of Euro and drop levels in the case of GBP, that they could do it during the mid-US session. So at that time when they drop, we can buy GBP, then subsequently they are expected to gain the levels. So we have to read their intentions and then decide upon which currency at what time frame we can take, rather than simply looking into the economic conditions of Europe or economic conditions of UK or US. And economic condition does not change from second to second, and the market continue to make their swings. So you have to find a disconnect. Probably that could be used for the overall trend in the market, either on the upside or on the downside. But invariably understand the players make intraday trend reversal moves and weekly trend reversals and also monthly trend reversal moves. So they have the limitations. They cannot continue to rise or continue to drop. Euro and GBP one-sided for prolonged period. So they alternatively make swings. So in a falling market, still in a buy and sell position, you can make profit. In a rising market, still a sell and buy trade can also make profit, provided you understand the type of moves they are trying to do it in the market during different time frames of the day. Ultimately, we have to trade only live. We cannot just theoretically trade of the yesterday's moves. We have to trade live. So we have to understand the market live. And we can just say that probably I'll read the past market performance of yesterday, day for yesterday, 1 week, one month, or just 200 days moving average. All those things we can apply, but still we need to trade live, and we need to take live decisions in taking positions in the market and also exit out of the positions in the market. So as long as we are human, our estimates and our decisions can go wrong, because it's not only in trading. In many situations in life, you would have seen some of the decisions have come correct, some of the decisions have gone wrong. So as long as we are human, we are bound to make mistakes. So if that is the situation, whether it is in the market reading or in weather forecast or any such analysis, ultimately the element of error is involved in that. In the process of, if you try to ignore the element of error, then we might lose a lot of money. So what is the scenario you have to follow? Limit the risk systematically using a hedging order or a stop of 30 pips, which you can afford to bear. And the other important thing is avoid over trading. Only when you take too many positions at a given time, then you find that we are not in a position to handle them properly. And when the market moves against those positions, then usable margin is being eroded by all the positions or taken away by all the positions, and it triggers the fear. So if you take only one position at a given time, focus on its trade, read all the currencies, but focus only on one currency at a given time for trading decisions, and try to earn 30-40 pips profit or 100 pips profit. Then afterwards, you try to choose another currency wherein you find a good momentum is seen, then try to enter into that particular currency. That way, if you try to do it, instead of grabbing positions in all and becoming jittery when the market goes against. So whether you do a sell and buy trade or a buy and sell trade, at a given time, the market can go against you or move in favor of you. So when it starts moving in favor of you, keep stop at entry. Because we cannot get that assurance from the players that they will continue to show the profit for us, because they are here to grab the money from us by doing various cunning strategies. So again, in the case of GBP, just 10 pips above that of the low, 1.5433, I am keeping a buy limit order with an entry stop of 30 pips. If they fill it, fine. Otherwise, I don't repent on it. I will just try to handle whatever the positions they are given to me. And ultimately, I need to see that I use the trading strategy to limit the risk and without any fear, try to earn money from that of the market. As I explained, that in case if they go up and hedge me, and if the hedging is making profit, I will simply keep stop at entry here and watch and close the sell position and try to earn money. In case if they start making the drop, then I'll keep stop at entry in the buy sell position and remove the hedging order and then trail the stop when they go down and try to close it near that of the low, 32.12. So this is how the trade plan is. Very simple. So let me minimize the PowerPoint presentation and take up the questions which are asked, because the earlier part 1 I could not spend much time in answering to the questions. I focus the camera over the live market quote page. Then John T. Do the players have the same strategy in regards to 2.5 session move being the intentional move for the, yeah, that is how they do it systematically. So 2 sessions and the early part of the next session, they make the false move. if it is an intentional move, either on the upside or on the downside. You just watch whether they are making that moves consistently. And also you watch the start time of the sessions, like 8 GMT for the European and 14:30 GMT for the US. And when the market suddenly become very active, understand that that is how they just set the timings. You might be having your the New York session, Pacific sessions, etc. But these are all the times followed by the other players. So I want you to understand the players. If you want to understand the players, we have to follow the language in which they communicate. Instead, if you say that I know only English, let them talk in English, then I will try to understand. We may not be able to understand. Adam, how can we identify what kind of moves should we expect during Asian session? So every day you come across the scenarios. During the Japanese session, they just make up and down moves and make the initial lows and the highs. They make the spread between the low and the high at that time. When they make such swings, only then, because the market opens with it of the previous day close, and later on, the interbank treasury sets the lows and the highs initially around 0030 GMT, based on the last 30 minutes trade done towards close of your session. Then subsequently they spread that, increase the spread between the low and the high around 3:30 GMT. They set it, and that is being accepted and understood by their counterparts. Then subsequently they start either making a downward move or the upward move, and in that process they have to necessarily communicate, because in the market one of the important things which you need is, suppose if the players are buyers, if they want to buy, there should be someone to place a sell order there. And only then if they buy that, suppose euro is currently trading around 1.3261 and suddenly it has to jump to 1.33, what they have to do is they have to ask their counterpart to keep 1.3300 a sell order and simply buy it using your order 1.33, which you will not be able to place it in your online trading platform, whereas in the bank they can place it 1000 lots 1.3300, the market will suddenly jump. That is how the spikes are being made, by using specific type of orders. So only when the order is filled, then the trade is shown. The lows and the highs are said. If simply they keep a bid and the ask, nothing will happen in the market. Suppose if they keep 1.3300 in the bid and there is no sell there, because or 1.34, there is no sell order, because normally any trader who takes a position, they keep about 20-30 pips above the limit order to exit out of the position, but not 100-150 pips above. So obviously they need somebody to place their order. So they do the circular trades like that. So I should not talk more in open public too much about them. Okay. Then Francisco, can you say again why the euro hedging order was removed? Because euro, I took a buy at 32.65 and then it went up to 32.78. So about 15 to 18 pips profit was shown. So immediately I kept stop at entry 32.65 and removed the hedging order 32.35. Then they came one way, big way, and hit my stop entry. That's all. So I have not incurred any loss. And even if I fail to do that, still I'll be able to handle the situation by booking profit on the sell side and booking profit on the buy side, or close it at break even, because market has to necessarily make swings. In JP, can you inform the gap time is all sessions and what action can we take? I explained that 3 different gap times. Between 7:30 and 8 GMT is the gap time before that of the European session. 14 to 14:30 is the gap time before that of the US session. They use specific orders to hit all the stops on the upside or the downside before making the reversal move. Now the session has started 14:44 and they have not made any big drop. So in about 15 minutes, So what I have to do is simply hedge it. So this gap time trades ought to be done only for about 30 minutes or simply accept loss. Close. So this way, if you are prepared and you see that in 15 minutes they have not made the drop from there, so that means they have already done the downward stop and gap time they gained, and they wanted to continue to gain the levels. So that means already they have trapped the short sellers. They do not want to make a swing. And the next dip, I'll try to buy around 32.54 or 32.60. Okay. So this is how you have to be taking quick decisions by looking into the other currencies, how exactly they are manipulating, because GBP has already come to the positive territory and Australian dollar has come close to the high in positive territory. So I cannot keep euro short. Hope you are able to understand how quickly I am taking decisions on these things. Otherwise, if you simply wait and say that it will move as per that expectations or it will move as per the forecast and things like that, nothing will work. And we have to take spot decisions on that. So accept a small loss and then try to recover it in a big trade. And that is the strategy one need to follow in this. So my buy limit order, they may not fill. So anyhow, I just keep it for the sake of keeping. And normally when an order is placed, I just hold it for about 1 hour. And if it is not executed, I just remove the order, look at the market price and try to do it. In Phoenix, do you expect Euro USD to breach 1.32 level today? No, the way in which they are gaining straight away during US session, they are already done the induced the longs to liquidate for the weekend. Now they are trying to target the short sellers. Alternatively, they have to trap because long holders have lost the money, so they will not enter. So only the short sellers will be out of greed holding the positions, try to maximize the profit next week and week after and things like that. And there they can trap, quickly make a rise and earn from them as well. So if you simply become bullish and bearish, you won't be knowing when to close the position. That is the biggest problem. Many people try to enter into the market correctly, but they fail to close it effectively, grabbing the profit. And in such a scenario, the best way is use the trailing stop. Then I am long an Australian dollar on 98 range. See, this is how people ask questions. Around 98 he is holding without a stop. So asking for an advice. I can give an advice, but if it doesn't go, immediately he will pounce on me. He will say that your forecast has gone wrong and you do not know about the market because actually that person has already taken the position. So this is how you find the controversies happening. And ultimately what I try to suggest is, whenever you take a position, try to use the stop or the hedging order to limit the risk. And after taking the position, when the position is making about 150 pips loss, still you want somebody to take a decision on your position. And if you are willing to accept such decisions, then you have to hold responsibility for your position. Instead, you should not fix the responsibility to somebody else. I do not know 9,800, 9800, how many lots positions you have, how much of equity you have, whether you will be able to withstand if there is further drop. Okay, these are all the scenarios are to be understood. And simply expecting the market to go in your favor, you can pray to God. But you have to necessarily limit the risk. And you can wait for 0.98 to come in by next week. But how you are going to handle it is your responsibility. why I'm very objective here, because many people ask these questions and later on they yell at me for no point of or no mistake of mine, because they hold that view, bullish view or a bearish view, and subsequently anybody is calling that market will go up, they'll say, okay, you are the best person for me. And when the market goes against, immediately they say that, no, you continue to say buy, whereas the market has gone down. So all such emotional decisions are to be controlled and able. For extended move after we wait for 2 hours, if high low not breached, we take counter trade. Correct? Yeah, if the initial low they are not come up to, we can take a counter trade, but always understand during the extended move on the upside, if you are taking a technical trade of buy above that of the high or sell below that of the low, always you have to close it within the session or within the day. You should not carry it for the next day, because they can simply reverse it when they make such breakouts. So if you use trailing stop and try to come down, suppose the initial low is 1.3303, and if you would have taken a sell there around 1.3290, then you can continue to trail the stop, and if they come to 3212 and trailing stop is of 30 pips, they could have closed your position around 32.42, and then they have gone up. So if you don't use the trailing stop, they may come up to 1.33 and stop you out at entry. So you have to quickly grab the profit. There comes your skill set in a technical trade. In a swing trade, you can calmly handle it. Buy near the low, sell near the high. You will be able to handle it easily and try to make money out of that. So if the high or low breached, we take technical trade. You are right. If they breach the high or the low and stay above the high or stay below the low for more than 30 minutes, then we do technical trades. Matthew, what about weak beginning false move? It is similar to that of the stoppers. They make weak beginning false move. Before the rise for the subsequent days, they make a drop on Monday. So every time understand that they have to trap us first. Only then they can earn from us. So that is why weak beginning false move. Then for the month end and the new month beginning, they make the volatile moves, right, quickly. Next week we will come across how volatile the market becomes. Now you see that market is very subdued, making about 2 pips, 3 pips. Next week you see it will make jumps of 25 to 50 pips in no time. That is why small traders, I suggest not to trade during the last week of the month or the first week of the month. The volatility will be very high. They may not be able to withstand with limited equity, and that too many of the traders have got the tendency to trade without a stop. Then you check with most of the traders who have seen the margin call. They would have seen the margin call during that of the month end time, because they make big moves in order to handle the derivative market, like the option expiry, futures expiry, and things like that. So they have to necessarily make moves. Now you find all of a sudden USDN has started galloping, started gaining up. Why? Because they are hurried to hit on the upside the stops for the month end. Otherwise it was making only 10-15 pips move on a daily basis around 76, 77 and things like that. So they have got a purpose for making the moves in the market. It is not that they have that some affinity with Japanese or Japan with the US and things like that. They are here to make money. That's all. Then rumor of S&P announcement as euro crosses also mixed up at the moment. So if you see, if it is a rumor on euro CHF, no, it was trading around 22.50. It has gained about 70 pips from there, 23.20. They made the drop, and if you see that negative net change is 89 pips in the case of euro, and CHF it is about 98 pips. So it is a nominal move. So, and if it is 200-300 pips move, then you can just say that. What do you mean by hedging order? Hedging is nothing but entry stop. You try to take a buy in the same currency. You can also hold a sell position and it will not offset the other position. That is called hedging. S&P 500 is going to heaven. Okay. They will try to make up and down moves. That's part of the game. Always understand they first trap us. Then only they make such big moves. Anyway, can we expect a drop in Australian dollar during the year? The way in which they are rising it and they've gone up to that of the high and made an upward stop, and it is unlikely it is coming down because they are sustained above that with a positive net change for a prolonged period in the case of GBP and the Australian dollar. So this indicates that whether they wanted to rise or drop. That is why I always insist that you look into that of the net changes. Have you cut your euro position? Yes, I closed it with a nominal loss. Because when during the gap time it is only 30 minutes time, and after the gap time they are not making a dip, then first 30 minutes. In 15 minutes itself we will understand that they are not going to drop. They may make a small dip after gaining some more and continue the gains. So in fact, when it is holding above that of the 30 to 54, the European session low, and again I told you 30 to 54 I'll be a buyer, or 30 to 65 I can buy. That is how it is. Because ultimately we want money. There is no question of bullishness and bearishness associated with money earning process. So let me go back to the slide. So I just closed it with a nominal loss because they are not made any big drop during the first 30 minutes of the European US session. You would have noticed it why I closed it with a nominal loss of 7 pips. Because the way in which they gained to positive net change in the case of GBP and Australian dollar indicated that they wanted to gain. So we can, next dip, we can take a buy and try to book profit during further rise. So this is how you can identify the type of trends they want to do within the session. So I take this opportunity to thank FX Trade for the kind opportunity to present the webinar, and also you people who have come here to listen to my talk and willing to accept the concepts, try to experiment it objectively and try to see whether it is suitable, all these concepts and the trading strategies. And if it is suitable, then probably you can try it in a demo trading platform and you are able to successfully handle the situations without any bias and without any bullish or a bearish feel in any currency pair. Then it will work out very well systematically. Try to use the hedging or the stop to limit the risk and maximize the profit. So I thank you one and all. So I'll come back on Monday and present Asian session live market analysis. And I will try to continue that analysis before you. And my humble request is you try to objectively study the market without getting distracted very often. Thank you one and all. See you on Monday. Wish you a very happy weekend.